Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Wednesday morning pre-market webcast. Daily chart of the ES, and after touching that 1882 level yesterday, the bears were able to put together, a pretty solid move down in the afternoon, and they're following it up in the overnight, which is, that's always what you need to see from the bears. You need to see some kind of follow through. You need to make sure that it isn't going to be a one and done. That doesn't mean we don't bounce today. The bears really need to survive the entire day in order to avoid another one and done type scenario. The last time we saw that was here. We saw that here. And we saw that here. You get the red day. You make a lower low, but then that's rejected, and we get back up. Red day, lower, and bounce. Okay, so the bears have to avoid the bulls coming in and buying a morning dip off of the open and running it up for the remainder of the day. The key areas in that regard are going to be 1867 to 1870. 1867 to 1870, which is essentially the area of the 9-day simple moving average, which you see here, which is in the area of the overnight high. The overnight high, 66.5. We've done lows of 59, so we've already broken yesterday's lows. So the setup favors the bears. And I hesitate saying that because the majority of the time when we say that the setup favors the bears is right about where the bears drop the ball, and then a couple days later we end up on new highs. So if you're short here, you need to be taking profits. You don't have to cover it all and get out, but you have to understand that the short side has a penchant for blowing nice setups, and they have another nice setup today. Now, if the bears follow through, I'm looking at two particular areas as support. The first area, the biggest area, especially if it happens today, is the area of 1850. That is where the middle band lies. It's also in the area of the 23.6% retracement of this move, of 1732 to 1887 half. So this is the first area of potential support. If the bears continue on through the week and show some persistent weakness, then you have to start to look at the 50-day exponential moving average, which is coming in here at about 1827, which coincides with the 38% retracement of that move, as well as the 23% retracement of the 1640 October 2013 lows. So 1640 to the 1887 half highs. So you have these three areas as potential support. But the reality is, and what we've seen so many times, and just when you think it can't do it, it goes right ahead and it does it again. If we close below middle band, and middle band goes resistance, there is no reason why we should not go to the lower band. Now, lower band will rise. It becomes very interesting if lower band rises to meet price in this area, in the area of 1827 to 1830. So I'm mapping out some lower levels, but that's what you have to do. There's a potential for the bears to follow through, so you have to know where you are and where you're going. So, if there's another 30 handles of potential downside there, but you have to temper that with almost the expectation that the bulls can turn it around at any moment. So, like I said, if you're short, be taking profits, and but always have one eye on the exit, because you definitely don't want to turn a winning short into a loser, and you don't want to be shorting in the hole down here, and then have that turn into something where you're constantly adding, looking for a lower high that just isn't going to be there. That's how moves like this bounce and create new highs, bounce, create new highs. Don't get caught in that trap. Okay, everybody have a fantastic day. Check us out on Twitter at Princeton Trader. Check out the website. Come check out the chat room. Got a lot of trials signing up. A lot of people converting over to full subscribers because they like what they see, come check us out. See if we can help out with your trading. I think we can. I'll be back tomorrow morning with another webcast. Trade them well, everybody.